My name is Carpel. I'm CEO and founder of Tradespoon Yellow Tunnel, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. Happy Friday, Russell. I encourage you to visit the link, optionscaring.com, to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor CCM. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Fred, good morning. How are you? All right. Again, pre-market routine is important. Very important to walk the dog. People who pray. People who meditate. Then turn on TV, look at the Bloomberg news, read the pre-market news, and review your trading journal, review your trading plan. Right. I encourage you to write down key checklists, right, or key points in your trading plan to make sure you don't break the rules, right? Most important rules are your cash, right, and your goals. Goals should be clearly defined, easily achieved, right? You could set the goal where you may want to make 1% a week, or you want to set the goal, I want to make 2% a month, or I want to set a goal 10% a month. Whatever the goals are, they should be clearly defined and easily achievable, right? Depends on, if you're doing day trading or you're doing longer term trading, the goals could be different. And all of us have different goals. There's no such thing as universal goals, right? We're all different. We manage different amount of money. We come from different walks of life, right? And we have different relationship with money. So it's very important to make sure that you have that in writing. And always do this what if scenario, right? What if the market goes up 20%? What if the market goes down 20%? How will I feel? What will happen, right? Do I have enough cash? Do I have too much exposure, and et cetera, et cetera? Very important. Write them down, review them before market opens, and concentrate on things that are within your control, right? It's going to be hard to determine at what point the oil prices will go down from 100 back to 60 or 40. So since you don't know exactly when the oil is going to go back down and whether it will create longer term structural problems in the economy, it's important to always keep that in mind and concentrate on things that are within your control. And then there's those that vegetate, right? Go to your garden, make sure that flowers have enough nutrients and fertilizers, make sure that there's no weeds, right? Take out the weeds. I mean, all of that is very important. Actually, I do that too. So obviously gardening is extremely important. And then concentrate again. So review your cash. Always have cash in your portfolio. If you don't have cash in your portfolio, if you fully allocate it, my personal belief, it's a mistake, right? At some point, when you get caught off guard, you have bigger losses and you get emotional, right? The idea is not to get emotional, right? The only way to, at least for me, not to get emotional, if I know I have ample amount of cash, and if market presents an opportunity, market drops 10%, and I think it's oversold, okay, then I can start, utilizing cash. 30% in cash, that's an important part of any trading plan. Now, I think, from seasonality point of view, I mean, there is obviously risk with geopolitical situation, but, I think 30% in cash, maybe 20% in cash on average, I think that's appropriate. 0 is inappropriate, 50, I mean, just depends, for my parents that live off of their savings and they don't have a full-time job, 50% cash is fine, right? Because their portfolio, I keep always at 50% in cash, even though my father-in-law always wants to put all of it in QQQ. I always tell him no. So, but that's, that's average, right? You can't, for my father-in-law, it's 50%. For me, it's 20%. Somebody who has a full-time job and works as a CEO of General Electric, maybe he doesn't need this money. Okay, fine, then maybe he has only 5% in cash or 10% in cash. And portfolio drawdown, right? Number of positions and position size, right? 4 positions, 2.5% of account value per position exposure. So you have 10% drawdown. If you knew you haven't traded when market is down 10% and your portfolio is down 20%, I would propose 4 positions, no more than 2.5% of account value per position. And that's kind of your reference point. Your portfolio per position is down 2.5%. Okay, close the position, take a break, put on a new position, or but don't let any of your positions be down 5-10%. That means you just have too much exposure to that position. Be long and short the market at the same time. Long term, I mean, market is overbought. It has been overbought for many days now. It can stay overbought. So maybe you want to sell calls against your stock position, right? Maybe you want to do option spreads, right? But maybe you want to put on a QQQ put hedge, right? Small amount, right? Just to keep that insurance on when you feel like market is overbought and should consolidate. I think the pullbacks are going to be shallow at this point, right? Unless oil goes to 150. Seems like market is used to the 100 number, probably. But small hedge I think makes sense. All right. In terms of the model, most of the weight is done by technology. Fred did not let me buy Intel calls. Fred, I'm very upset. But QQQ is in uptrend. You can see the momentum is getting smaller in relative terms, but still shows that QQQ could get to 700 by end of the earnings season, right? So if QQQ is at 700, you probably don't want to be too surprised either, right? If we're going to have Intel up 30% after the earnings or 25%. So QQQ is up and continues to be in uptrend and leading the market. If you look at the spiders, this number is getting smaller and smaller. Momentum is getting smaller and smaller, and that means that we're on no screencast. Share loss. Thank you. Sorry about that. I apologize. You should see the screencast now. Yes, thank you. Perfect. Sorry. So spiders still in uptrend, right? 702, 715, but the uptrend is getting small. We were at 4%, 5%. Now we're stalling, consolidating. Probably shallow pullback. 700 is the main support. I think 690 to 700 holds. That's your gamma flip point. At least unless obviously we're going to start bombing Iran again, then fine, then we could. But as long as we don't bomb Iran, and I guess we just see who folds the card first. Market is used to that, right? At some point, obviously, if this situation continues into end of May, some people say end of June, some people say end of September. Nobody knows exactly, but at some point, $100 oil prices are unsustainable. The question is at what point? What's the tipping point? I don't know. Is it end of May? Is it the end of June? Is it end of September? I don't know. I don't think anybody knows. I think I've heard all kinds of opinions. But anyhow, so spiders is still in uptrend, QQQ is an uptrend. If you look at the equal weighted S&P, it's stalling. Well, actually like spiders. Let's see, VTV. VTV is stalling. So VTV, equal weighted S&P, that's the way I looked at it, it's stalling, kind of not breaking out. Small caps. Small caps are still in strong uptrend, 3%, but decreasing. And then what? Emerging market. Emerging market, slight uptrend, right? You might want to take some profits from the emerging market. In terms of earnings, Procter & Gamble is at 150.80, right? We were talking about Procter & Gamble. Schlumberger, right? So yesterday we were talking about Schlumberger being down. So I sold the put spread, so that worked out well. Procter & Gamble, I did both put spread and call spread. The 150 strike is still where there are a lot of positioning. Let's go to Avantgarde trade. What is it called? Procter & Gamble. So very large position at the 150 strike in terms of open interest, and there is some 155. But if you look at the highest open interest was at 150. I mean, we do have position at 160 and 155, but for now we are kind of glued to 150 level. So I need to hedge, so I'm going to buy stock to hedge my strike. I sold 150, 152 call yesterday in my personal account. So, you can put small stock position with the idea that 150 strike will hold, right? That we're going to close at 150, right? We're not going to go to 155, and we're not going to go to 145. And it's going to act as a magnet. It may or may not, right? More often, like Intel was the same idea, but, there was a very large position in the 70 strike, right? So I basically said I wanted to sell put spread. So I did sell a put spread that's in earnings power trader. And I wanted to buy a call spread, and then Fred talked me out of it. So I blame Fred. I always have to have somebody to blame. But I sold the put spread because I was concerned that just like Texas Instrument, you're going to have these outsized move because kind of AI theme is resurging again, right? At least all the companies that are participating in build out of, all the bricks and shovels or something like that. But all of the pieces, data centers, CPU, memory, Microns of the world, the storage, right? You need that to build out data centers. So I was concerned, but in all seriousness, I wanted to buy a call spread, but I didn't do it because actually people were not very bullish on Intel, right? You kind of see that put and call ratio was basically, people did not anticipate 2 standard deviation move. I was a little bit concerned, so I just sold the put spread, did not sell a call spread. So that was more or less a good idea. But at this point, you can close the put spread. Any questions so far? Is everything in Discord? I did get a new computer Discord, guys, so now the only reason you don't see the screen if I forget to share it. But anyway, so that's that. Cisco is down 1%. Microsoft is up 1% after the, not all stocks are up 20%, right? Now, yesterday was down 20%. We had IBM down yesterday, right? 10%. So IGV in general is pulling back again, right? It's kind of in bear market. That's why you always have to be concerned about these rallies in bear market, right? Especially if there is something, if the earnings cannot support. I mean, you could have 20% rally easily, right? But the problem is that, if the earnings don't support this 20% move, you do have a sharp pullback yesterday across the board. Whether it was Microsoft, it kind of pulled the entire sector. Microsoft was down yesterday, Oracle was down, right? And CrowdStrike was down. So they're all down. Actually, CrowdStrike was the bullish signal by the model. I did not put it because I was concerned about the earnings season, right? Model cannot predict the outcome of earnings. So I kind of didn't put it on the list. But I did put on, right, semiconductors. So on kind of vertical move up as a semiconductor. And there's and energy. I do like energy. NEE. Right, and so NEE, maybe this is a good entry point. And then XLU, right? Utilities in general looks like this double bottom, head and shoulders, and maybe go back to the neckline. But those are the signals. Let's see what else. So we talked about Procter and Gamble. We talked about Schlumberger. Intel, right? So that, even though the strike was very high, right? But that doesn't mean it acted as a magnet, right? It kind of pushed to 80, right? The 80 had the next large strike, and it actually broke through the 80 level, right? So this high open position doesn't mean it's going to stay there. Citigroup. Okay, let's review the other positions. So first of all, I mean, I was not here for the past 2 days on Morning Bell. So the trades are Intel, 59.58 put spread, that will expire worthless, right? So that was the trade. There was a signal, Arista, right? We talked about Cisco, we talked about Arista. So I did get into Arista yesterday. I decided to be a little bit more aggressive since I closed ADI, right? ADI was popped, more than 5%. So I decided to take these profits and put them in something more aggressive in Arista, right? Same thing, AI theme. Just remember that, Arista, Seagate, Intel, this is all, you can actually say GEV, right? They might have a different business model, but it's the same momentum. It's the same theme, AI, resurgence of AI and investment into AI. So these stocks are continuing to go higher. So let's see. All right. And then I think that's it. Let me see. 2 days. What else did I do last 2 days? So I closed analog devices, ADI, Citigroup. I did add to Citigroup. Citigroup is down. Marty asked a question, but I mean, it's still above 20-day moving average. It's upward slope in all the averages. You have a breakout above 125. There was a large positioning at 125, right? If we would look at the Citigroup, Fred wanted to add yesterday. I said already, I'm going to wait till 125 strike. Let's see, expiration. Oh, I thought there was a large position at 125. Well, I guess 120. So there's 120, then 125. So I'm more inclined to wait to 125, 20-day moving average, before adding. So still long Citigroup, right? I closed half of the position, right? Yeah, so I closed half of the position. I reopened it, and at 125, I'm inclined to add more. I mean, right now, you definitely see outperform, like you can see XLF, and then just in general, all the value stocks, right, VTV, they're stolen. They haven't done anything since April 8th, right? Where QQQ is making new all-time highs, almost on daily basis, right? So people are rotating, that animal spirit is back on. I mean, you don't want to follow the crowd. I mean, you can be more aggressive on ADI and Arista, but I would still be diversified. I wouldn't put all my trades. You might seem like GEV and Arista have nothing in common, but you're not diversified if you invested in Intel, Arista, and Seagate. It's the same theme. I don't know if you guys have any questions. All right. So that's QQQ. Let's see what else. So that's Citigroup. Let's go through the rest of the positions. So Arista, that's yesterday. That would be one of the AI stocks. I wouldn't have too many, right? For now, this is that was a signal yesterday, right? If you look at the active trader from yesterday, or aggressive power trader Arista yesterday. Arista, Goldman Sachs, Schlumberger, right? These are the signals from yesterday. Right, let's keep going. Citigroup, Cisco. So I still have a Cisco spread. It's trading at 89. It's a 85.90 call spread. Looks like it did break out, kind of consolidated back to 20-day moving average. I'm still bullish on Cisco. I closed the stock position, but I do have May option spread, so I'll wait. JEPQ, continue to hold JEPQ to get my dividend. Just going to be trading around this position. It's making new highs. I mean, still not at all-time high, but it's grinding higher. So that's good. And then Microsoft, half of the position Microsoft. Yesterday, after ServiceNow and IBM earnings, it pulled back. But I think out of the software names, I like Microsoft. right? That's kind of speculative play on the catch-up trade, that earnings next week is going to be okay, right? And we're going to close this gap potentially. I mean, we could revert to the lows if it's like ServiceNow, but if it's like IBM, you know, it could go higher. Any questions? Procter & Gamble is at 149. Okay. Let's see. What's the spread? 150, 152.5, 75 cents. Sold it for 40. Okay. Guess we can wait. Got 40 cents credit on Citigroup. Okay. Yeah, I think I would still stay diversified, because the problem is that 10-year yield is above 430. We were at 435. So bond market and equity market, there's disconnect, right? There's animal spirits in the technology pursuing the AI, but then the bond market tells you, you know, structurally, the longer the oil prices are at 100, right? Crude oil 95, Brent is 105, right? At some point, right? At some point, market cannot continue going higher, right? Either oil drop to 60, right? Or, you know, or stock market drops 10, 20%, right? One or the other, right? You can't have this for prolonged period of time. $1 million question what that time is, and I don't think anybody knows. Well, somebody knows, but you know, they did not tell me. Any questions? All right. Don, Fate, Fred, Kevin, Larissa, Lewis, Mario, Martin, Mr. Simon, Patrick Tahir, Thomas, Bill. Thank you for joining. We have a lot of people. Cherry Blossom, El Marco, Adriel, Muffin, Rosser. All right. Everybody's here. What else? I went through the positions, went through interest rate. Bitcoin, right? You can kind of see, we were talking about Bitcoin. It's alive, right? It's, I mean, very bearish price pattern, but I would say it did break this downtrend, staying at the 100-day moving average. I mean, major resistance 85,000. I would be surprised if it breaks above 85,000. But nonetheless, you know, it's still slowly grinding higher, kind of a risk-on trade. How's ARK Innovation? ARK Innovation, similar to software IGV, right? It's actually doing a little bit better than software. And then, so let's recap what happened this week. Retail, down week, right? So kind of unable to break through all-time high. Oil, stabilized, right? You have this breakout above April high 24. You have sharp pullback and de-escalation, and then rebound and escalation. So it looks like oil, you know, unless you think there'll be a peace agreement next week, maybe it makes sense to buy. We had a signal in Schlumberger, right? Trying to break out, actually turning positive. Halliburton, right? So not this Halliburton, this Halliburton. Right, so maybe it makes sense to start. Somebody asked about ExxonMobil. I think Martin, maybe, right? Maybe it makes sense to put some of your position into energy. Okay, let's keep going. Metals and miners, silver, aluminum, they're doing well. Not well, but you know, they pull back after the de-escalation. Now escalation. You know, copper prices pull back significantly. Let's see how the copper futures. Copper is actually at multi-year high. Is it all-time high? Not all-time. Oh yeah, it is all-time high. Okay. Yep, copper prices are high. FCX, you know, didn't have good earnings, but copper prices are still high, maybe because gold is down. What else? Okay, we talked about metals and miners. Consumer discretionary, not breaking out, but close to all-time high. Sharp pullback in healthcare, pullback. Utilities, no new signal, kind of trading in a range. Consumer staples pullback, right? People are rotating into XLK technology, so QQQ is breaking out, XLK is breaking out. Industrials are stalling, right? So your industrials are stalling, your healthcare are stalling. Money is shifting definitely back, right? QQQ consolidated for many months, right? So QQQ basically didn't go anywhere since September of 25, 1, 2, 3, 4, 5, 6, 7 months. So it's consolidating and now it's breaking out, right? And that's usually a good sign, right? When stocks is consolidating, that once they break out after long-term consolidation, then usually there is a follow-through. All right, so that's XLK, industrials, financials, energy, talked about that. Materials, stalling, right? Home builders, stalling. Biotech, pull back, right? You had a clean breakout and now pulling back. That's another candidate. A lot of people like biotech, maybe a little too volatile, but maybe this is a good entry point into biotech. And value stocks are stalling. VIX is 19 handle, we're headed 18 handle, and QQQ is up. All right. Semiconductors are up, Intel, Texas Instruments are driving the semiconductors up, AMD following. And then what else? Small caps stalling, transportation stalling, telecommunication pulling back. Emerging market. It makes sense to trim my emerging markets at all-time high, not breaking out. So my 401k, I'm selling, trimming my EEM position. The emerging market is a dollar story. Dollar is weaker, but then it's very sensitive to oil prices, right? So it makes sense to trim. If it breaks out and there is some kind of a peaceful resolution, then I guess I can get back to it. CBTV is also not going anywhere. Okay. What else is interesting? So value is stalling, small caps are stalling. Mid caps are stalling. KKT is the only thing that's breaking out. And that's about it. All right, any questions? All right, so, I mean, keep an eye on 10-year yield. It looks like it built the bottom and now trying to resolve to the upside. So I would be concerned about that. And obviously crude oil continue to grind higher. No new signal, same level as last week. Crude oil, same level as last week. But again, a lot of it depends on geopolitical risks. It seems like the only thing that's going higher is the AI theme, right? It's your semiconductors and your technology names. All right, that's all I have for today. Thank you very much and have a great day. Have a great weekend. Enjoy time with your friends and family. Thank you, Patrick. We do have a strategy roundtable on Tradespoon site. So if you guys want to, I spend more time kind of going over the tools if you want to, and market, if you want to spend a little bit more time, I would appreciate if you guys do join the webinar. It's at 9:30 Central, 10:30 Eastern. All right, guys, have a great weekend. Enjoy time with your friends and family.